Everyone, it seems even now the big Wall Street investors are not only turning bullish on Tesla, but now becoming hyper bulls. It's hard not to see the Tesla story shaping up for a major stock breakthrough. So first, we have Dan Ives of Wedbush Securities saying Tesla is the most undervalued AI name in the market, and he expects AI and FSD, full self-driving, to represent $1 trillion of value alone for Tesla. Second, we'll watch RBC's Tom Narayan. He did an interview on CNBC, and he says Tesla is a play where investors can find safety. Yeah, can you believe this? Tesla is now the safe investment. What a turnaround in sentiment. And third, we have Morgan Stanley with two new notes on Tesla. The first one is saying how the 1010 Robotaxi event will be a major catalyst for the stock. They share what they call their dreams framework for the future of Tesla, and we're going to go through that. And in their second note, they share breadcrumbs from Elon Musk that hint at Tesla's next products to be drones and flying cars. Boy, they really are dreaming now, these guys. So sometimes they're very negative, and now they're getting uber hyper bullish, and they're dreaming things, which is a great thing, but a little bit far at some point. So we'll see if you think this is true. Welcome, Hans. How are you doing?
I'm doing good.
Good. Thank you so much. Check out Hans. He got his own YouTube channel called Hans C. Nelson, and he does many videos just like this, but more deep dives and more interviews as well. So check him out. So let's start with Dan Ives. He's going to be our favorite here. I'm about to interview him again, hopefully this weekend, so we'll see. But he's been great. He's been calling it right. He's been very bullish. He's been saying a lot of the same things, which is, that Tesla is the most undervalued AI name in the market. He's been saying that quite a bit. And guess what? It's coming true now. We expect Musk and company to unveil some game-changing autonomous technology next week in LA. And he says, we continue to believe that AI and full self-driving represents $1 trillion of value alone for Tesla over the coming years. This is, I think, the first time I've seen him put a number to what he thinks. This might be a little too much. Be curious to see what you think on that. So his note basically said, a new era of growth ahead. It's going to be a historic day. And they'll be attending it live as well. And they go, we believe Robotaxi Day will be seminal, historical day for Musk and Tesla, a new chapter of growth around autonomous, FSD, and AI future. We continue to believe Tesla is the most undervalued AI name in the market, and we expect Musk and company to unveil some game-changing autonomous technology. And then he said this, we believe it's a pivotal time for Tesla. The company prepares to release its years of Robotaxi R&D, shadow behind the curtains. He's going to lay out the company's vision for the future, and they're confident the Tesla story, which has proven successful many times over, and we look forward to the long-awaited event. This next evolution of transportation unfolds. Lots of hurdles, questions still about insurance, cost of vehicle, timing, regulatory improvement, timeline, overall operations, among other issues. But again, he says, we continue to believe AI and FSD represents $1 trillion of value for Tesla over the next coming years. That's very bullish. Is that too bullish?
I think that, $1 trillion of value is obviously on the table. The question is over what time frame. And Dan has always had kind of a longer view of the development of technology. It allowed him to be very successful with his investments in companies like Apple. And so I definitely know that this is, he's much more longer term thinking than a lot of the traditional analysts, especially when it comes to tech. And so if he's looking out at least 5 years, potentially in that 5 to 10 year time horizon, then if we execute really well, it could be $1 trillion of value well before the 5-year mark. But if you put some error bars on that, I think thinking about things in the 5 to 10 year time frame make that $1 trillion number not only possible but highly likely.
Yeah, I agree. I actually don't think it's too bullish. It is kind of it's a nice number, right? It's like, grabs your time. But the value for Tesla, depending on what you mean by that, do they mean market cap? Do they mean revenue? Clearly, it's going to be a big deal. But this is why it's important. Like, right? The company is not just an auto company. The reason they were building these cars, they're robots on wheels. This is FSD. FSD's not, he's not just talking FSD, by the way, autonomy, robotaxi. He's talking about AI as well. And so that is more than $1 trillion for sure if you add the bots and so forth, right? Yeah.
Absolutely. And, obviously it's a talking point that in the retail community we discuss often, but you don't see any other automakers that are building Cortex at their company headquarters. And Dan's not stupid. He knows what that means. He's watching what all these other big players that are trying to compete in AI are doing, and to see Tesla keeping up with the Joneses, so to speak, when it comes to hyperscaler build out, that's significant. And it provides them with an advantage in this AI empowered future that other robotics and vehicle manufacturers don't currently have.
Okay, well, that's Dan Ives. He's always been a bull. Then you got people like Tom Narayan, who is RBC. He's very interesting. It's actually quite common, actually, when you think about it. These are people who, institutional analysts, who will be very, very bullish. Obviously, there's bulls and bears, but this guy's been a bull. Believes in everything: Robotaxi, bots, all these things. But stock is his price target is like nothing. It's still like at this this price we have today, and the reason is because they think it's like 2030, 2040 actually is what his number is for Robotaxi. So that's where the disconnect is. It's like, yeah, we believe it's going to come, but 2040. So Tom Ryan was interviewed, but what's really interesting was when he says Tesla's a place where investors can find safety. My God, did you imagine we finally hear some investors say this is a safe investment? Let's listen to what he actually says.
Here to discuss is RBC Capital Markets analyst Tom Narayan, has a 224 target and a buy rating on Tesla. It's good to see you again. Tom, I just wonder if you think any of this goodwill around this month's delivery number is deserved right now?
We're also seeing it on a relative basis, which is, I think, how most auto investors look at versus what's happening in the rest of the industry. This Stellantis profit warrant comes on the back of 3 other profit warrants from European automakers in just the past couple of weeks. So I do think a lot of folks are looking for safety. Tesla, interestingly, it seems to be a place where they can get that.
Yeah, some of the EV numbers out of like France and Germany for August were so horrible. Is there a share shift happening over there?
No, it's a complete market dynamic. You saw incentives get cut at the end of last year in Europe, especially in Germany. And also just pricing is just too high over there. You will get some relief in 2025, though. Remember, these OEMs have to make a very severe CO2 regulatory cliff, so that will come back. But definitely, that softness in EVs is being felt very severely. We do think incentives will have to come back, especially in Germany. That should help a little bit in 2025.
I want to pause it there because there's a couple points here that's kind of interesting to discuss, right? So first, they refer to the safety part because of the comparison to the automakers struggling. We've been reporting, like he said, like there's at least 6 automakers in just the last couple of weeks warning on profit takedown. I just did a show on that with Jeff this morning. We published that. Did you know that Volkswagen, God, I'm getting confused now, sorry, is $5 to $10 billion of missed profit that they were hoping to get. And then he talks about that next year, 2025, there's a regulatory cliff because Europe put these milestones of how many electric vehicles they must produce, and they're not going to hit it. And though they're going to have to pay penalties, billions of dollars in penalties to the European, and they begged the European regulators to, ease up on that. And then they said, no, we gave you plenty of time, and they refused to budge from that. So that's what's going to happen. Double whammy.
Yeah, I mean, automotive is just a highly cyclical market, and people always forget that Tesla selling direct to consumer provides different timing for their revenue recognition than legacy automakers. And so when a lot of people were wringing their hands around Tesla's gross margins and lack of sales growth and all these things, and they were saying, well, look at, they obviously look terrible when you compare them to the legacy automakers who are all doing great right now. Well, we didn't know, we were seeing in real time what the auto market was doing, and legacy autos financials are just going to lag by anywhere from 3 to 6, potentially even longer months. And so now we're seeing that flip to where Tesla's kind of stable, and all of those dire results are really flowing through for these legacy automakers. And so now Tesla looks like the safe one instead of the dangerous one when everyone else seemed like they were doing fine. during times when Elon Musk said like things are bad out here, and people just thought he was, basically crying wolf, and because everyone else seemed like they were doing fine. That just wasn't the case. Especially the there's a couple of huge dynamics going on here. One of them is that China is just dropping all of these legacy Western OEMs like hotcakes. Their market share in China is evaporating rapidly, and that's a place where they used to make a lot of money.
Mhm.
The second thing is, as Mr. Narayan mentioned there's an affordability crisis that no one is really delivering cars at the really entry level end of the market. Everyone is kind of moving up market into these luxury cars, things that cost, anywhere between 40,000 US and up. And there's just a lot of consumers who can't afford that, especially now that cost of living, over the last 4 years has risen by almost 20%. So people just don't have the money to spend. And so the fact that these automakers have been moving into this higher price point really just prices a lot of the market out. And so this is the reason that we've seen a shift towards hybrids, that they can make a little bit more inexpensively than they can make EVs. But at the end of the day, it's not going to be enough to save them because they have too many headwinds. And they're really just kind of in between Tesla's two growth waves. Once we see the $25,000 vehicle come to market, whenever that ends up being, that's just going to make this situation so much worse for so many of them.
So I did misspeak. It wasn't Volkswagen, it was Stellantis that had a $5 to $10 billion profit warning. But actually, Volkswagen also reported that they have revised their sales targets for the second time in 3 weeks. So, like, what's going on with that, right? Okay, so let's go ahead and listen to Tom Narayan again and see what he's saying here.
I mean, deliveries this week, but then the Robotaxi day the week after. And I do wonder how much of this is optimism and excitement over that and starting to price in what that might look like.
Yeah, that's fair, right? And the stock has run quite a bit. It's run, past my price target as well, notably. So sure, folks are looking at optimistically on Robotaxi and what that could mean. But that said, in the backdrop of what's happening in overall autos, I still think it makes sense to still be constructive there. And recall what's happening in Europe, for example. Next year, that regulatory cliff, guess who these OEMs in Europe are going to be buying credits from? Tesla. So I think a lot of folks look past where the price is, the share price is, and looking more towards sentiment and the narrative. The narrative is autonomy. Sentiment is numbers beating. These regulatory credits are going to be pretty big. Then you have energy storage. Deliveries look like they're going to be fine. So on a sentiment basis, which is, I think, how this stock trades, I acknowledge it could be a sell the news type event, Robotaxi, but the day. But I do think there's enough inertia now, given how the rest of autos is trading, that it could still catch some support.
Is a return to the highs on Tesla anywhere in your modeling right now?
Yeah, I mean, look, my modeling is very conservative. I don't include any optimists, which is, by the way, coming up a lot in questions. Folks are starting to look at that. My Robotaxi numbers, I think, are quite conservative, $400 billion of value. I think this could expand autos well beyond the $2.7 trillion level. So the upside is significantly higher than where my price target is. And definitely, you could make a case, obviously, for where the stock is trading. But again, I don't think folks are doing the math on DCFs on this name, right? They're looking at catalysts near term, and there are several. And I do think folks will continue to be excited on the back of the Robotaxi event.
Tom, appreciate it. We'll see what we get on Wednesday. Good to see you again.
All right, so at least he addressed my issue with him all the time. He says all these incredible things. He does not include bot, which is, again, he's getting the pressure. He's going, why aren't you including bots? Then you got these big markets, and then he talked about DCF, right? This kind of cash flow. You got to like go backwards. If that's the market, and then you add a probability to it, why doesn't that add to the stock today? Considering that there's probabilities, and he's at least addressed. Yes, I know.
He's like,
but he's gonna.
I'm just too conservative for that. Yeah. Yep. The couple things that I wanted to point out here are that he didn't mention the reduction in interest rates here. And I think there's a strong case to be had that a lot of the bounce that we've seen in Tesla is at least highly correlated to the reduction of interest rates, if not entirely due to that. But we'll really have to just watch over the next couple of months. I am by far, not a near-term stock price forecaster. I suck at that job, and that's why I kind of stay away from it. So I don't know, what things are going to look like a month after 1010, if we're going to be at 225, 250, 275, 350, all of those things, have some likelihood of potentially coming to pass. But I did appreciate his comments around the fact that right now it is a sentiment driven stock. There are a lot of catalysts right now, and momentum begets momentum. And there's a lot of cool things that we're seeing on the execution standpoint, like we've mentioned. But then also the broader auto market is just a tough place to be. And so if Tesla is showing strength at a time when the rest of the auto market seems to be showing weakness, then that relative outperformance really can potentially drive good performance in the stock.
Thank you for that. Okay, so that's Tom Narayan, RBC. That was Dan Ives. Now we got Morgan Stanley. 2 notes. They dropped 2 notes. So this is interesting. Why do you do that? Why do they have 2 notes? Why not just have one all big note? Anyways, there's 2 ideas here, I guess. And so the first one is they call it the economy of dreams. So we believe Gen AI and LLMs may prove to be the great unlock for Tesla's value as an AI power. Where are the best paths to monetization? And what will it take to turn Elon Musk's dreams into reality? So they came up with this acronym, and they think that the Muskonomy is a much bigger play for how AI is going to play, and they explain it. So, going backwards here. So can the We Robot event be a catalyst for narrative change around Tesla's shares, which are still trading nearly 40% below all-time highs? And then they go, right now, over 80% of Tesla's revenues are going to be derived from automotive activities. Easily 90% of incoming client questions are focused on short-term auto-related data, like third quarter deliveries. As Tesla's CEO makes further progress in building out his inference swarm, cars and robots, and AI compute, including XAI, we believe investors will see a clearer picture of the overlapping surface area between the Tesla and other parts of Muskonomy, particularly the evolving relationship between XAI and Tesla. So this is, again, this is something we've been seeing, and others are now going, yep, it's coming together. The Muskonomy will help each other. So they have this framework called DREAMS. D is data, robots, energy, AI, manufacturing, and space. So data is monumental. Crowdsourced data manages images from physical world, Tesla vehicles, infrastructure, Starlink, and X. All of these guys are generating data. You got robots, right? So you got everything from anything that moves that has cameras on it, cars, drones, ships, humanoids. Energy. This is the renewable, low cost, reliable energy supply, solar and battery storage, as well as this distributed thermal management, the cooling. You got AI, the inference cloud, data centers like Dojo and digital twin simulation. You got the manufacturing, software enabled integrated supply chain, drives affordable commercialization at scale, and then space, data transport. You got the space Starlink to be able to send data wherever they need to be. So this is this image of the Muskonomy. And if you think about everything together, you've got this connection between manufacturing, energy, AI, robots, and data, and they're all being connected together by SpaceX and Starlink as a connective tissue. How do you interpret what they just said here?
It's an interesting way to slice and dice everything. AI means a lot of things in a lot of contexts, and overall, Tesla's not the only manufacturing company. Like SpaceX is also becoming a prolific manufacturer as well, not only of rockets, but also of Starlink satellites. What they're building there in Bastrop is really exciting. So I do think it's fair to break out manufacturing and not necessarily silo that inside of Tesla. I have to think about their overall framework more. I do kind of like it in on a number of points that you really get data from a lot of your different activities. You get data from your manufacturing, you get data from the cars, obviously, that are operating, from the robots that are operating. Um, you get data like Starlink has an incredible amount of data that they have access to through operating this service that provides internet to so many people. And then the ability to get value out of that data using artificial intelligence, I think, is only like we've only seen the beginnings of that. And that is going to be something that really transforms the profiles of all of Elon's businesses over time. Um, so I like the way that Morgan Stanley is thinking about this.
I like to look at it this way. Just start with Tesla. So Tesla is in manufacturing, it's in energy, it's got an AI play, it's got robots, and it's got cars. Great.
Yep.
Now, right now, there's no clear understanding how SpaceX and Starlink is going to help all of these. But that's the point. The point is, okay, well, there will be a time when Starlink and SpaceX, right, will be helping. Whether all the cars will have a small mini dish on it, whether or not there's a need for instant connectivity for some reason, whatever. But so that part is interesting, of course. And then now you got XAI and X, and those are separate Musk companies. XAI can help with the Grok, right, which is you communicating and working with data and robots. So clearly you need to think about Muskonomy and how each of these companies can help Tesla and vice versa. But Tesla is the big one, of course. It's public company today. So that's just a way to think about it. There's lots of connections. Yeah.
Yeah. Well, especially I think that they don't have enough connections there from AI, and maybe it's just the way that they define AI. Like,
Yeah.
AI is going to be a big part of increasing efficiency in manufacturing. It's also going to be part of distributing energy, and there's lots of other connections there. But if they're just thinking of AI as large language models and generative AI, which was something that he said earlier, and I can kind of see the way they silo it. I think that's a silly way to silo it, because what Tesla's doing specifically around AI is mostly not generative, and it's mostly not LLMs. Like, there will be a piece of that over the long term. And it's just the ability to apply neural networks to solve real world tasks, whether that's driving or whether that's labor with Optimus bots. And that is definitely AI. And I think it's a bigger field and revenue potential for AI than a lot of the generative AI and LLM stuff is. That's the one place where I would kind of maybe
I would
take
change
issue.
this. I get that exactly.
Yeah.
AI should be at the top, and then it should have a connection to everything.
Pretty much.
And then Tesla is a robotics AI company. He's been trying to hammer that home, and it's not quite yet hammered home for everybody. AI is a robotics company. Tesla's a robotics AI company. Okay, so Morgan Stanley is actually themselves coming out with their own little conspiracy theories, little tiny, fun things, and they think that Tesla might get into drones. And they found some breadcrumbs. So is it just me, or are you seeing more breadcrumbs from Tesla's CEO, from Elon, that could potentially connect Tesla with aviation? So Tesla sits at the intersection of robotics and AI. Cars, 81% of Tesla's revenues, and falling because obviously they're starting to get more revenue from everything else, are just one expression. So Tesla at the robotics AI, cars is just one expression of robotics AI. So then he said, okay, there was this post from China that they just set recently 2 Guinness World Records in Shenzhen. They displayed 10,000 drones operating in a highly coordinated aeronautical visual display. I'll play that. And then Elon responded with a series of tweets on X. He's been saying this for a while, that the drones is going to be the way that countries are going to have warfare, and it's going to be critical. When someone wrote that the US currently has a capacity to make about 20,000 consumer-style drones a year. Oh, no. China's current capacity is closer to 20,000 drones a day. He replied, yeah, it's not even close. So I don't know if that means anything, but I'm going to go ahead and play. But this is a drone display in China, and this is 10,000 drones going in an aeronautic visual display. This is crazy. And the US, they only make 20,000 drones a day, but they're making 20,000 drones. Sorry, the US only makes 20,000 drones a year, but these guys are making 20,000 a day. So could Tesla get into the drone market? And let's just finish this off. And the other breadcrumb was that in the second quarter conference call, Elon said in his comments, he said the world is headed for fully electrified transport, not just the cars, but also aircrafts and boats. Other than the passing mention of electric aircraft during past investor days, we are not aware of such a prominent reference to aviation and marine in an earnings call. So could Tesla get into the eVTOL, this a flying car kind of business? What is it? What is an eVTOL? Vertical takeoff and landing?
Yeah,
Vertical
it's just an
takeoff and
electric vertical takeoff and landing.
Yeah. Do you know what UAM might be?
Unmanned
Aircraft.
aerial.
Yeah. What I thought maybe
Something.
too. We have a range of scenarios, but it could be that it's a $9 trillion TAM by 2050, discounted back on a per share basis. See, at least these guys are the research group and the the analyst part, they don't talk to each other, I guess. You know, if you discount that back, that's an order of $100 per share right now, just on this potential that they might do this. We note that our current 300 does not include a devaluation of Tesla participation in the aviation market. Okay, there you go. What do you think? Is this it's kind of silly?
Well, I don't think it's silly at all. Actually, I think that there is a significant risk. You know, every time we see major technology shifts, it changes the way that war happens and what warfare looks like. We've seen several of those transformations over the last 100 and some years, and I think that drones are definitely going to play a big part of this next transformation. We have players like Anduril here at home who are really focused on the defensive application of drones. Elon hasn't really developed anything with Tesla that has a specific military application, but there is a potential for him to pursue the commercial market with drones, which is, you know, most of what China is producing right now is also commercial drones. There is pretty obvious potential for those to be militarized. So that's the existential threat, and we know that Elon is very motivated by existential threats, that these are the types of things that actually get him to move to action. I think that China's move into humanoid robots is a big factor in, and like those obviously have a military application. I think those are a big factor in Elon's development of the Optimus platform. But he's also said that the Optimus platform is not going to be a military type application robot, you know, and they're specifically not building it in a way that it could be threatening to humans for that reason. So anyways, I think all of that really combines to make it likely for Elon to develop drones, but the types of drones that he would be developing, I don't think necessarily translate into large amounts of like flying cars type eVTOLs. A lot of times when people are talking about eVTOL, they are speaking of airborne taxis of some sort, mostly for humans. And I think it's probably not going to be that. I think it's going to be more smaller drones that are tasked with delivering packages and goods and stuff like that. If they get into this area at all, which, you know, there is a big question mark if they do get into that. I know that he would love to do his supersonic eVTOL, which would be kind of like a human transportation thing long term, but I don't think that there's an existential risk to humanity that is attached to the supersonic eVTOL. And so that's where I think the thing that's most likely ends up being something that's a lot smaller and something that competes more directly with what China's putting out there. Because I think that
Okay. Yeah.
swarms really are the biggest like
Concern.
existential threat, and swarms are going to be high numbers of small drones.
Yeah, I like what you're saying. I think, okay, let's break this down. So drones, I think he's going to do drones, right? Because you're like everything you just said, right? You can't have, it's an existential threat of one. It's like AI, right? You can't have one AI company doing it. You have to have equal numbers, and then if you're able to produce equal numbers, then they'll be like do this dance. Apparently, somebody was saying this is great. It's like I'm bigger than you, but at least they know that they can counter each other. If only one country has that, it's crazy. So I think he'll do drones. He talked about the Roadster. He did say that the Roadster is going to fly, right? So this is like just a video I found here of the Roadster and how he's been talking about it potentially flying. And so what does that mean? Is there going to be some sort of, thrusters? Is it just going to float? So this is the ability for Tesla putting in already SpaceX technology into a car. But then he has also said pretty strongly. He said that he doesn't think that cars flying is a safe thing. It's kind of dumb because you can fall, it can kill people. More likely, it's better to have boring tunnels is the way to go. It's better for the environment, all that kind of stuff. So he was saying that. And then he said what there could do in the future is this plane, electric vertical takeoff. I think you just talked about it, which is, coming out, taking off, and then going to, it's like replacing planes. Instead of taking so long for a plane to take you from country to country, you can do a short rocket to get there. Boom, 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 right? And go to space, as high as space, so that you have less friction and all that, and get there much faster, an hour, instead of like, the whole thing. So I think that might be what he would do. Yeah.
Yeah, that's the supersonic eVTOL concept. I mean, yeah, I would love to see that. One of the, I guess, other factors in the military technology and the applications of what Elon is building is that if SpaceX delivers on the Starship and they're able not only to successfully fly them, land them, reuse them, but if they can manufacture them at scale, Starship is also, has very obvious military applications that provide an asymmetric form of warfare that the United States would have a dramatic advantage over China in. And so if we can counter China's dominance in drones with American dominance with starships, like they're completely different types of technologies and they have different applications. But something like that might potentially eliminate the need for us to compete directly with China in drones head to head, because we can counter them with something else that they have no ability to defend against.
Yeah. Okay. Thank you so much, Hans. That was a great conversation. Lots of fun there at the end. Follow Hans on his YouTube channel, Hans C. Nelson. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.